Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is down a little bit. As you can see here, S&P is down 0.8% as of close, and the Nasdaq is down about 1.3%. However, they were down significantly earlier this morning. I think almost Nasdaq was down as low as 5% at its lowest, I believe. S&P close to 3.5%. So quite a bit of recovery that we saw towards the end of the day. And this is kind of the things that you're gonna see in a bull market. Bulls are not gonna go away right away. They're gonna put up a fight. When you see market is in an extended sessions and when we do see a pullback, and a lot of times people think that they're gonna market is extended and so therefore they're gonna see just straight down move. Well, I think a lot of us got spoiled or scared because of what we saw with COVID. That was definitely just dropping like a rock just out of nowhere, right? But you have to understand that that's a very, very rare occurrence. You can go back and study the market, and usually market doesn't go down like that, especially 30-35%. All of a sudden market has been going up, and then we drop every single day for a whole month, and then you know what I mean? Like, that's extremely, obviously this is the fastest, it's been recorded as the fastest decline ever recorded, right? So we can't count on these rare occurrences. You know what I mean? Like, because those are extremely difficult and difficult to time it. Right? If anybody's been waiting for something like COVID, they've been waiting for 33 years, because the last time we saw anything like this was 1987, and we didn't see another one. Like, market is in an uptrend and then all of a sudden it drops 35%. That's not something this market produce on a regular basis. You know what I'm saying? But I think people are kind of scared because we saw that in March. So they think it's gonna happen again, but I don't think so. And this is something that I've been advocating this entire rally. But we are hitting that resistance, and we pull back from it. At its low, we were suffering about 6% correction from the peak. Here, let's see. So yeah, about 6% this morning. Now it's about 4.3% since the peak, that peak right here. And so let's try to figure out what we can expect going into next week. We do have a long holiday weekend, right? Monday being that Labor Day. And so, and I love long holidays, and what a ride, last several months, right? Since the March lows, such a great run, and I think this is well deserved, definitely needed, long holiday. I am very much looking forward to it, to rejuvenate, right? To recoup, and to come back into the market on Tuesday, and then reassess the situation at the time. So let's try to find out in today's video what we can expect going into tomorrow. Next week, Tuesday, Wednesday, Thursday, Friday, next week. And it is all coming up right now. All right, so let's I'll come back to this daily chart, but let's go back to the 65-minute chart first and follow up with what we've been talking about this week, right? So this was yesterday, right? We talked about how we formed that hammer candle there. Well, I've analyzed the hammer candle yesterday, spending some time with it. Talked about how you need at least couple hours of follow through. We also talked about that short-term moving average potentially acting as resistance. Only way we could have confirmed that hammer candle would have been we see couple hours of bullish candle and then potentially pulling back, retest, and forming higher. Well, what happened was everything just happened in the first hour, right? We gapped up slightly, rallied within the first hour, and then we just straight up tanked. What also happened was there's this gap area, which I thought were gonna slow down or find support. This is at 340, 340, 342 area. We blew right through it. We didn't even slow down. We ended up slowing down, however, guess where? This is why bulls deploy gap area, right? This is why. So they have cushion. So bears pushed it hard, right? Bears pushed it hard in the first hour of this morning, right? Trading today. And then they kept pushing. They pushed onto the second hour. But you see, even though bears blew right through this gap right here, well, there's a second gap. And I think by the time it got into the second gap, right, bears what? Well, they're getting tired. Right? So this is why gaps are good. This is why you want to track gaps. So if there's a first gap and then there's a second gap. So there's a cushion for the buyers. At least we saw a little bit of, little bit of bounce. I mean, that's not little. Actually, that's quite a bit of bounce. Keep in mind, S&P was down as low as 3.5% today, while the NASDAQ was down as low as 5% in one day. NASDAQ was, I think, down about 5% today. So I was tweeting things out pretty much all day long today. And so this was this is right here. So this is the S&P 500. Oh, nope, this is not from today. Where is it? That's not from today. This is it. This is from today. The other one was this is from today. So I was tweeting this out. So you can see here, we blew through this gap, right? And then there's a second gap. But what I was really talking about is, well, bulls are getting tired. Okay, so we're getting into that extreme oversold level. Do you remember the last time we saw any kind of pre-sizable decline since this rally happened? Well, that's this decline, right? This decline was the last time we saw any kind of steep decline looking at these after the March lows, right? This entire rally, right? Not counting this pullback, but after market bottomed and rallied higher, what was a steep decline we can compare it to? This is June pullback. So that's what I was doing, right? I expanded, I zoomed out, and the most extreme oversold level was in early June. And that's what this early June is telling us. And that was extremely oversold level. And you can see that we're getting right to that level. And this was when Spider was trading at 337 this morning. Right now, obviously, Spider's at 342. So we bounced off of it at 337 here, right? After hitting that oversold, extreme oversold, similar to 2020 June, right? That was that level, that oversold level. And I was talking about how bulls are getting tired. And then on top of that, right, we see that this gap area is a pretty significant gap area because we found support here, we found support here, we found support here. And after, we came all the way back down here now, after about a month later, and retesting it and we bounced actually pretty hard after throwing our hammer. This is a hammer right here. That's a good looking hammer right there, right? And this time we saw follow through, didn't we? I just explained that yesterday. You can watch yesterday's video because that logic, right? It applies here. There's a hammer there, right? And then we saw long lower wick 3 times or more, right? The wick is longer than 3 times or more of the body. And then we saw follow through on the first next hour. And what did I talk about yesterday? That second hour, it never breached below the hammer, the top of the hammer candle, the hammer highs, right? And we held in a second hour, and then you can see the third hour, we see a continuation, right? So it is no coincidence. Here you can see this is the reason why technical analysis is such a beneficial for you navigating this market on a daily basis, because, well, it's no coincidence that we found support right on this gap area. It is no coincidence that we pulling back right on my short to mid-term moving average, which is also coinciding with what? Prior support potentially acting as resistance. How are you going to know these lane levels? And this is how you can adjust your positions and plan it accordingly, right? But anyhow, so we found support 335, threw a hammer, continuation. Third hour, we saw ramp. And then fourth hour, we continued, attempted to break higher. But my short-term moving average, my mid-term moving average, colliding in that vicinity, coinciding with that falling, coinciding with that resistance, a pivot there, prior support, new resistance. And now we have a shooting star candle, right? Same logic applies here. If it continues lower, because we're in a short-term downtrend, right? We talked about yesterday, I gave it short-term bearish, right? Because we're below the short-term moving average. Even with the first hour or first couple minutes or 10 minutes or what, I wasn't watching this morning, so I don't know how long we stayed up here, but you know, early ramp, we were not able to close above my short-term moving average. So it was a correct assessment yesterday that we're bearish in the short term, right? And now we actually gotten below my mid-term moving average. So you can see that this is the first time getting below my mid-term moving average since this move started, since early July or late June. Similar thing happened here before where, so what we can do is we can try to kind of figure out what that midterm moving average means. So you can see there are a few times where there's one time here, and there's one time here and here, where price did get below my midterm moving average. Back in May, we briefly got below it, but a couple days later, we gapped above it, and then uptrend continued. However, it was a different story in month of June. We got below it, and then what happened? We initially bounced from here to here. But same thing occurred as to what is happening today, where we bounced, but it met with my short-term moving average and my mid-term moving average clusters, and then it fall back. So right now, you can see we have my short-term moving average here and my mid-term moving average here, and are we gonna fall back? And we got the shooting star candle there, right? And because we're still short-term bearish, sentiment is still bearish in the short term. I mean, so here in June, what happened was we got up, hit my short to mid-term moving average, we pulled back, and then we gapped down, and initially got back above it, and then things just got hectic for the entire month of June, until this midpoint became the subtle higher high, which we talked about it at the time in June and July. So we have a little bit of conflicting information. So obviously, as of today, benefit of the doubt goes to the bears, sellers in the short term. Mid-term, I'm going to give it neutral. Why? Because price is now below the mid-term moving average, meaning we may be chopping around like we did in June, because I did the same thing for you guys in June. My midterm sentiment was what? Throughout June, it was pretty much neutral. Hectic environment. You guys remember that? It's going to be hectic. It's hectic environment. Hectic environment. It's going to be neutral ground in the midterm. As my midterm moving average moves sideways, so does price. Move sideways. Doesn't advance. Does, you know what I mean? It moves sideways. Stays in the sideways. And then once my midterm moving average start rising higher, my price also rise higher. So now that, because we're at that early stage, it could very well just, you know, continue higher. If we do continue above my midterm moving average, then then scenario is going to look more like this scenario, like in mid-May, where we saw, you know, price getting below it, and then we just continue higher and trend continues. So as of today, we don't have enough information. Are we gonna? Does it gonna look more like a June or mid-May like this, where we got below my midterm moving average, and then but gets right back up next day, and then the uptrend resumes? Or is it gonna be more like June, where entire month of June we were going nowhere, very volatile sessions, and just chopping up and down? Right? So those are the two scenarios we maybe look forward to going into next week. We'll have a better idea going into, you know, early Tuesday. Obviously, you can follow me at 2K. I'll tweet things that I've been tweeting a lot in the last couple of days as the volatility picked up. And so, and we have a little bit of conflicting information because on my oscillator, we just got the cross. But so we have to compare that with June and May. Let's compare it with June and May. So May, right here, right? When you can see that when price got below my midterm moving average, we saw a very clean cross. And this one went all the way back up to the highs. And we threw that higher lows on the oscillator. And you know what happened. We had a very phenomenal run, right? It went from 270 to 320. You guys remember that. I was analyzing all of that for you guys. What happened in June, though, we did see a cross. And inevitably, the oscillator continued to move higher while the price kind of made lower lows. You guys remember back in June? There's a video, you can go find that back in June 12, June 11, June 10. We were talking about this bullish divergence where it made lower lows, but then the oscillator continued to move higher. So inevitably, oscillator actually did go all the way back up, but then we are hit by this falling resistance on the oscillator, not support like May, like this. Instead, in June, we did this. And then things got difficult. So we do have a cross, right? Obviously, oscillators is subordinate to the price action. Price action is always the king. Price action is going to determine where it's going to go. So this tells us in the short term, bears are tired. That's what it tells us. Bears are tired. Bull took advantage of it in the short term today. What I'm trying to figure out, what we can figure out going to next week though, and we'll get better idea on Tuesday are we just going to see a gap up and then this trend continues, rallies again for the couple weeks, several weeks, maybe a whole month of September, or maybe at least next week, right? Or are we gonna like do another thing it did in June where this thing kind of comes down like this, choppy? The reason why you're gonna get a choppy price action at these levels, well, we got the gap support and we saw my oscillator crossing up. Bears are tired, so bulls are gonna try to buy these dips. So as we do see some kind of a grinding action, potentially making lower lows, but then while the potentially oscillator move higher, and doing some of bullish divergence and making attempt to make some run, and then we have to go from there. So I think going into next week, I think bulls are going to fight, but also bears are going to try to show it also. Bears are going to try to bring it down more. So it will be important because we'll have a better idea going into next week. So short term bearish because we are below my short to midterm moving average. Benefit of the doubt continues to go to the sellers going into next week. Midterm, I'm neutral. Because again, are we gonna be like mid-May where this is gonna continue higher? Are we gonna be like more like June where we're gonna get in a hectic environment where this thing could just sideways for a month? To be honest with you, I'm kind of leaning towards that scenario, the latter, which we may get into a choppy sideways potentially, right? We may even, another scenario I can kind of see is because how extended the NASDAQ and the other indices are, we may even see where you see like a mid-May type of move where this thing continues higher next week and make new highs, new all-time highs, and before falling back over. And I explained this in the last couple weeks video. If you remember, like you know, I talked about how one day you're gonna wake up, you're gonna see like 2-3% down day, and then all of a sudden you're gonna see like, you know, buyers coming in, buying the dip quickly, and that's how what you saw on the NASDAQ, right? NASDAQ was down almost 5%. S&P was down almost 4% today. And how quickly it got bought up, you know what I mean? And where, you know, market can get back up, and then like, you know, everybody's like, oh, you know, this market, you just keep buying, you keep buying the dip. And I think there's a chance where even if we have something like mid-May, goes higher, but then it inevitably falls over, and then, you know what I mean, start getting into choppy, hectic environment. So those are two of my possible scenarios that I have for you. Just looking at this price action, we'll know more. The market will give us more information. I've been navigating this market with you guys since the March lows every single day, and we were able to kind of project when we're gonna see some prolonged uptrend coming. So we'll find more things going into next week, but for now, these are the information that I'm available, that I have available, that I can see, and I can kind of come off. I have to come with some kind of a potential scenario here with the information that I have. Let's go to daily chart real quick here. So on the daily chart, this is a pretty prominent, you know, pivot. It is well known, prevalent. Everybody can see that that's a prior resistance. So I actually think that it's, you know what I mean? We may see some bounce here, but it's kind of an obvious level, I think. So we did print a hammer there, and it is no coincidence today. We got right above. Price got right up. I mean, just right on the dot. It's so crazy sometimes how these things work. This is my 20 simple moving. Let me double check. Simple, I want to give you exact. Actually, there's a 20 exponential moving average setting at close on the daily. You can see how since July, it's perfectly acting as support. Even today in the intraday, we got below it, but it closed right above it. It's so crazy. We just closed right, just a little lower there, just right above it there. And it is no coincidence. And also, I threw the fib here. So you can see that I basically measure from, so this is important low, that's that June low, and then we made this rally, and that's the important peak. So I measured this peak to this low, and then you can see exactly where it came down to today. It is a first level of Fibonacci. It's actually upside down. It's actually 38.2% retracement. What it's saying is, if you measure from here to here, if this is 0, this is a 100% move. We pulled back 38%, 38.2% to be precise, right to that level, and this is where we found support, brought right back up to my 20 exponential moving average with the hammer candle there, right? So right now, you know what I mean? When I look at my daily chart, not 65-minute or daily chart, so because daily, this is my short-term moving average, right? Short-term, I have to give benefit of doubt to the buyers because we held this level. We're still above my 20 exponential moving average. And when I say daily, it's because when I look at daily, I'm looking at more of a longer term now, right? When I was looking at my 65-minute, I'm looking at just going into Tuesday, Wednesday, and Thursday, right? But when I'm looking at my daily chart, I'm looking at next week or two, right? Let's go to Qs here real quick. So Qs, Same thing, similar, very, very similar thing here. It closed right above, right at my 20 exponential moving average there. Got near to my midterm moving average for the first time, but it didn't quite hit it. You can see that we have also a hammer candle there. And, you know, also looking at the, I just want to give you a quick look here on the 65-minute chart. This is a 65-minute chart of the Qs. So Qs actually came down, because actually Qs were down quite a bit today. At one point, Qs were down like 5%, I think, today. Also, yesterday, it's like 4% down day. And it came down to my long-term moving average this time. We bounced from it. We threw that hammer right here. That's a good-looking hammer. Pretty long lower wick, shaved head, green body. Continued to move higher, and it started getting rejected where? My short to mid-term moving average in that vicinity. Same thing, the oscillator has just crossed. So what I've just illustrated earlier about mid-May scenario or June scenario, same thing applies here on the NASDAQ also. But looking on the daily, it's tough to say. Is this gonna be more like just similar to here, right? How many people trying to call top here, 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 trying to call top here? It's difficult to say. And when I look at this daily chart, I can't say this is the top. I can't say this is gonna go 237 either. We don't have much to go by at this point. So let's go to VIX here real quick. So on the VIX, we do have first of all, we have a lower highs, don't we? We got that high, lower high, and that's low, right? This high is definitely lower than this high. Can we all agree with that? That's a lower high. We did get rejected on my longer term moving average there, right on that. You see that moving average, this long-term moving average coming here. It's interesting because that moving average is support here, and then a resistance here, and then it was support here, and then a resistance here, resistance here. Pretty impressive resume, because it actually acted as resistance here and then tanked. So it looks like we attempted to break above it and then came down today. And actually I was, let's see here. So I actually closed out because you guys remember I had some hedges. I was long on a lot of these VIXs. I had a VIX calls, I had a VXX calls, and I had a UVXY calls, which I was accumulating these levels, and I closed half of those actually near the highs, because one of the reason was, as you know, this here, when I saw my SM, and these are the things that I've been tweeting to you guys every single day, right? And I was tweeting a lot today and yesterday, so you can use these information for these short-term trading idea or trading adjustments. So when I saw on the S&P, and not only that, S&P looked like it, you know, but it was more like a NASDAQ. Where's my NASDAQ chart here real quick? Let me get into it. Where's my NASDAQ chart? NASDAQ is what really did it for me. Right here. So this is NASDAQ. There you go. So this was a NASDAQ. You can see NASDAQ was still down 3%, but it jumped. It was down 5% at the lows. This is today. So NASDAQ hit my long-term moving average at the low. And then it got into like June low. Remember we just talked about when was the most extreme oversold level in this entire rally since March lows? June. So I compare it to June, I'm like, wow, we just got there right here. We just got there. And then we're starting to form a, you know what I mean, that hammer candle right on my long-term moving average. So when I saw that, I'm like, you know what? And then that's when I saw my VIXs are just deep, bright green. Not only that, I saw this resistance here. Here, I'll show you. All right? So you gather all these informations that I've just shown you today, and you can really plan accordingly on your short-term trades. I mean, obviously you guys know that I also do short-term trades, you know, when I have hedges and things like that, but I'm mostly long-term. So on the long-term side, no, I don't, this is not how I'm going to be dealing with, you know what I mean, dealing with my long-term positions, but my hedges, and I did have some shorts. And so when I saw my NASDAQ is getting into that, and then, you know what I mean, extreme oversold similar to here, and we did inevitably did bounce for a couple days here. This was a 2 days of bounce there. And I saw my VIX hitting that resistance, and then my moving average right in that vicinity, looking very, very bright. And they're up quite a bit because I had a VIX calls, out of the money VIX calls expiring a couple months, and VXX calls and UVXY calls. I called half of all of those so that I can lock in gain. So these charts, these short-term charts will help you making decisions on those short-term trades. Obviously, for long-term investments, you have to understand the long-term implications. So that's that resistance there, right? There's no way you're gonna trade these without technical analysis. The VIX, the S&P, the NASDAQ, you know what I mean? Especially in the short-term sense. There's no way you could have invested in this market back in March lows, April lows, May lows, June lows using fundamentals. There's no way, because fundamentals said it's horrible. Exit everything now. That's what he said in March and April, right? Fundamentals, economicals, all horrible, horrendous. Let's go to gold. As you guys know, I've exited my gold up here, and I haven't entered any longs on gold. But gold seems to be still kind of consolidating. We're not seeing any kind of distribution much. I mean, we've seen these kind of pattern before, these consolidations. So only time we saw a pretty steep decline was that COVID plunge. But looks like another one. We're still above my midterm moving average here. So it looks like it's more consolidating. I'm out of gold. I'm just kind of waiting and see what I'm going to do next. So let's go Bitcoin here. So Bitcoin actually did pull back. We talked about it the last week. I drew this for you guys last week. You can see right there. So that's kind of where we're seeing support. We actually came down, filled the gap, just a little bit of gap remaining, but pretty much filled it. And we held support, and we got pretty nice looking hammer candle here. Do you see that? And I've analyzed hammer yesterday, right, on the yesterday's video. That applies here, right? This is a long, really, I mean, you can put probably 5 or 6 of that body here. That's a long lower wick. Sometimes when the wick is way too long, it's like, sometimes it's not organic. This seems like pretty good size. Usually 3 to 4 times the body is like the textbook. It's pretty long, but obviously any candles, man, you need to see a follow through. If we don't see a follow through, if this thing starts seeing something like this tomorrow, this candle doesn't mean a thing. I did add on my Bitcoin longs, which I first entered here, and I added more there, somewhere up here today after I saw that bounce. It's pretty much the same level as where I entered last time. But I didn't do anything up here, right? This is why you don't ever chase, right? And so I added more here. So there's 2 things can happen. One, like, okay, this is pretty good support. Maybe there were a lot of chasers on Bitcoin. So maybe a lot of people are looking at this technical level there. They saw this thing breaking above this both resistance, this resistance. A lot of people chase it up here, and Bitcoin want to make sure they want to chase or punish the chaser, right? Something that I always like to say is market rewards the risk takers and punishes the chaser. So maybe you went long here. Some people, they maybe didn't chase, but if you're long term, let's say you did go long at 15. I mean, you're down 20%. It's not bad. If you're still long term, you could probably average down or something like that. If you're long term, like you got in a short term trade, then no. But if it's a long term trade, having 20, 30, 40 parts. I mean, what did Warren Buffett said? He said, if you're going to freak out because your position is down, your stock is down 50%, you should not be in a stock market, right? And this is the wealthiest guy in the stock market. So down 20% is not bad. So let's say if you did chase it, if you're long-term in it, like pretty decently long-term, maybe a year or two, you're not just trying to swing it. You're just trying to, maybe position trade, into maybe 20 or 25, it's still not too bad, even if you chase it right at the top and maybe add a little bit more down here. That's not too bad. But I never like to play a breakout. I never like to play it. I just don't like it. I never liked it. I'd rather buy it on a pullback. But so if the market decided it's gonna punish the chasers, and maybe now that they're getting stopped out here, maybe they play, then maybe it's ready to go. However, if market wants to make things a little bit more difficult, if market deem necessary that too many people are relying on this support, what it's gonna do is maybe we see initial bounce and we see a tankage and we get below this resistance and then maybe even come all the way down here. And this is a worst case scenario. And then through something like that, because then people say, oh, look at that, that's a back test of the support. On top of that, that's the head and shoulder formation. Hey, I'm gonna start shorting it and then go. I've seen that happening so many times. I'm not saying like this thing cannot come all the way then start making new lows into bear market again. Of course, anything can happen in the market, right? But what I like about it is in longer term is because we got the higher high. I'm still kind of looking at this as a higher high and lower low. So we'll see what happens next week. And I'm still long. I added more today on Bitcoin. We'll go from there, right? Well, you guys enjoy your long holiday weekend. We'll come back on Tuesday and we'll look at the market, reassess the situation together. We'll go from there. Good luck trading next week.